Hey guys, welcome to today's session. I'm going to give everybody a moment to join. I've sent the links out. Everything is going smoothly. I apologize for being 1 minute late. I need to get better at this punctuality stuff. Welcome, Blayn. Joining me today on the market review. What do I do this session?
Market overview. I don't know. Something like that.
Yeah.
We'll go with that.
It's because I changed the name on my market musing, so I was like, huh? What's the original called? I will win me today.
Go on, Marco.
Give everybody a moment to join, and then we'll jump in.
Oh man, you know I'm inside today because it's too windy, it's too cold.
If anybody was in yesterday's session that we did with Martin Tinsley, did anybody notice Blayn going whiter and whiter and whiter as the session went on? Actually, somebody said yesterday, if you wasn't in that session, and I can't stop thinking about it. Somebody said Blayn looks like Luke Littler with a beard, and I think we should change IME to be LLT, LLT, Luke Littler.
Nah, I'm okay.
Okay, guys, we've got plenty of people in the session now, so welcome everybody to today's session. We tend to keep these sessions pretty chill. We're just going to be taking a look at the markets, taking a look at what's been happening over the past couple of weeks. As a bit of a disclaimer, both Blayn and I are systematic traders. We don't execute manually. Yes, we invest and we, will analyze an investment or a chart for a specific kind of longer term strategy, but nothing to trade on intraday. So anything said in this session is not financial advice. We're not giving you areas to trade because it's not something that we will be trading ourselves. I like to get that little disclaimer out there because I talk about levels that I like and that I think is a nice area. But I think it's important that you guys watching understand I am a systematic trader, so it really doesn't matter what I think about the market. Although, having said that, I'm going to pull up this chart from Bitcoin because we spoke about this a lot over the past few months. Just turn off some of these indicators.
See, that's better than what I did. Whenever I've done the market overview, I'll look at it for 5 minutes and be like, yeah, I have no idea where it's going. Let's just move on to build something.
I still like analyzing. I still like keeping up to date with things, but at the end of the day, like, it doesn't really matter what I think is going to happen, or it just doesn't matter, right? But I have been saying for a while now, as soon as we broke through this level, I said we're probably going to retest the other side of this range. Just logically, it made more sense. Continue to consolidate below this previous level. I think I highlighted this up here. We then sold off. And to me, personally, this looks like the exact same. Like, it looks the same but different, right? We have the initial run into this area. We have the consolidation. We have the initial run off of an inverse level as well. So it's not like we're just, it's not like prices just turned around randomly. It's traded back into this area. Classic support turn resistance and all that sort of stuff, supply turn demand, whatever you guys want to call it, ran lower into the next range. And it seems like we're doing the same thing again, consolidating back here and again into an inverse level or an inverse area. Now, this is actually quite interesting because this area has been support, resistance, supply, demand area of interest for a lot longer. So you can see over in March 2024, it was the high. Then in October 2024, it also formed like a second high there, retested it in April 2025. And now we're kind of retesting this area again for the first time on the inverse side of that, which I'm going to say I really like, but again, I don't take action on this, which again, I think is important to disclose. However, I do actively invest into Bitcoin, so I do keep up to date with the chart and I do make some decisions based on where price is right now. But in my opinion, until we get some form of significant close up here, this just looks to me like it wants to scream to the downside. I mean, we can even do, where's my bars replay? So we can even kind of try and mimic this.
Okay, it's identical.
Yeah, pretty like to me, it looks like it's going to do the exact same thing, right? And I also think that this area at 50K, I've been saying it for a long, long time. Like personally, I think this area is probably one of the best areas on this chart. Again, we've got this initial high over here. We have a high there, broke through, we retested it. And now what I would love to see, purely for my spot positions, again, is an aggressive sell-off down here. Most likely, if tensions continue to escalate in the US-Iran conflict, we'll probably see something like this happen in a risk-off environment. I'll be loading up my bags heavily around here. And then eventually, if we get even further, phenomenal. Do I think we'll go down to 32K? Unlikely. Would I like it? Absolutely. So that's kind of what I'm looking for. The plan hasn't changed. I think it's been a few weeks since I've actually done one of these sessions due to travel and a couple of health issues that I had. So it feels like it's been quite some time since we've looked at this. I think the last time we did it may have been when we started to consolidate down here. Bear in mind, this is a daily chart, right? So this is beginning of February when we actually broke through that level, which is insane. That's like, what, 2 months ago almost? What's insane is that's 2 months worth of price action. It looks like a few days, don't you think?
Yeah.
Like, 2 months, wild. But yeah, for me, plan hasn't changed. My plan, right? So the way I approach this, and again, this isn't financial advice, it's just the way I do things. Every Monday, I buy some Bitcoin, sometimes buy some Ethereum. I have a basket on trading 212 that includes the S&P, or an ETF of the S&P, an ETF of the FTSE, an ETF of S&P Global, Global Emerging Markets, and some gold and silver. And I buy that every Monday, regardless of prices. But I am really interested at kind of adding more as we move lower through this range. And not just for like a short-term play or a trade, but for a longer-term move over the next 5, 10, potentially more than 10 years. Taking a look at Ethereum, pretty much the same story here. There's not much difference between the two. They're very, very highly correlated. Let's see if we can correlation coefficient. Also, nobody's put a comment in today. It's strange. Usually the first 10 minutes we're flooded with comments. If you're here, guys, and you're a regular to one of these sessions, ping a message in the comments box and let us know you're here. Okay, so correlation coefficient. Let's just there we go. Rob, I can always count on Rob. Yeah, Claudia. So I recorded the podcast with her on Friday last week. I just need to get that through her compliance department. So we need to send her the video and the transcript. Once we've got that, we'll have a good idea of the kinds of things that we spoke about that we can then put into a private. It probably won't be a live session like this, I'll be honest. It'll probably be a private session where only Darwinex clients can attend. And the reason for that is purely from a compliance perspective. It's very difficult for her to do anything live because her compliance basically have no say on what gets published, and because she's FCA regulated, it's a bit of a sticky situation. But I'll keep you guys updated. I'm still waiting. In fact, let me check. I'm still waiting for. No, nothing's come through yet. Annoying. I'm still waiting for the studio to send the files through, and I'm getting a little bit nervous because we're recording on Friday and we pay for them to send us the recordings and they've not sent them to me, and I'm getting a little bit scared that they've kind of lost them or deleted them. I chased them yesterday, I called them, but hey ho, it is what it is. Anyway, I've got here the current correlation coefficient, just measuring the correlation between Bitcoin and Ethereum. You can see pretty much over the past 6 months, let's say, October, November, December, January, February, March. Yeah, over the past 6 months, we've pretty much been fully correlated. We haven't come lower than this area, which is about 0.74. So we spoke about the correlation coefficient last night in the session with Martin. A score of 1 basically means they are fully 100% correlated, i.e. if Bitcoin is moving higher, Ethereum is moving higher. A -1 correlation means the opposite. It means if Bitcoin's moving higher, then Ethereum's moving lower. And then a score of 0 basically means there's no correlation. There's no relationship between the two assets. Now, of course, as they're both cryptocurrencies, you expect them to have a high correlation, same as silver and gold would have, as they're both precious metals. And the same as, dollar yen and euro dollar would have a -1 relationship, or closer to -1, because these assets, whilst have their own personalities and sort of structure, they still have a positive correlation or a negative correlation, which both means they're positively correlated anyway. Why did I even get this up? Oh yeah, I was just to basically say it's kind of the same story on ETH as it is on Bitcoin. I need to close down that indicator window. However, the Ethereum chart looks a lot more abysmal. I think I mentioned before, this is kind of the last defense for me. This area down here in between 1.3 and 800. I would like to see, in fact, I would need to see some form of rejection above here, like whether it's off of this low and then price moves higher, or whether it comes lower, takes out this low, these lows. We see a big flush of leverage into this area, then that's okay. But if we start getting acceptance below here, to me, that's kind of like Ethereum's done, and I wouldn't then want to be a part of that market. Again, that's not from a trading perspective, but it is from kind of a longer term horizon. Yeah. Can you go? I'm on stream. Being disrupted. There's 500 people on this stream who've just watched you come in and get that laptop. Anyway, moving on. I'm not even going to bother going into the alts because they look like they've just died a nasty death. I think like altcoins like Solana, right? There's literally no point, in my opinion. Like I'm not getting involved until they're back down here at 48, because I have genuine conviction that Bitcoin is coming lower to 50K. I'm still purchasing spot up here because it's just what I do. It's kind of a routine, and I'm DCAing in, but I have high conviction that we will roll over to 50K. I hope it happens. Like, it's not like I'm doom and gloom. I hope it happens because I want to buy some more. But if that happens, then yeah, absolutely, Solana is going to $50, $40, $30, and maybe even less. And you could say, oh yeah, well, there's too many users, as this, that, or the other. Crypto, specifically the altcoins, are a highly speculative asset, regardless of the use case that they have these days, regardless of the transactions, regardless of all these things that are going on. The token prices is highly speculative. I mean, we saw it in 2021. Solana was at $260 and it retraced 96.84% all the way down to $8, right? Like, that is ridiculous, like ridiculous. I wonder if you can have, do we have Solana market cap on here?
Jeez.
Okay, that's not, yeah, that's not. Solana market cap. I don't know if we. Oh no, it only goes back to 2025. Anyway, what I'm saying is these are still highly speculative assets, and if Bitcoin is going to roll over, then these will roll over far harder. And so I will be there to pick up the pennies when these fall back down to these sorts of levels, because there is genuinely generational wealth that can be made with altcoins if you time it right. I feel like Bitcoin and Ethereum are more sort of, yeah, you can get away with DCA spot purchases similar to equities and metals, but the altcoins you have to play completely differently. If you was buying down even at like $20 back in 2023 and you rode it all the way to the top, that's a 13x. So let's say you put 10 grand in, that's 130 grand. If you put 1 grand in, that's 13 grand. That's that can create generational wealth, but you're only going to get those opportunities if you're the one buying when everybody else is kind of looking the other way. You can never time the bottoms, you can never time the tops. That's not what this session is about, but it's about waiting, having patience and understanding. Like, I mean, this level is just absolutely beautiful. Again, it's just like, this is classic markets, right? This is classic stuff that if you go onto Twitter, somebody will be saying this is retail nonsense. This is something that you shouldn't be listening to, but it's classic markets. It's happened a million times and it will happen a million times more, right? Price is broken beneath a good level. Like, that is a massive fractal level, right? It's the lowest point from Feb 2024 all the way to Feb 2026. So it's a 2-year low. Price just absolutely caked it through there, consolidating beneath, rejected it. Now, if we break sort of through this area and roll over, like, oh my God, that will be stunning. Now, I'm saying this, you watch, it'll just absolutely rally, bang. And I think if there is a caveat here, and that's if the US and Iran come to some form of peace deal, or de-escalation, then yes, of course, equities are going to benefit. Risk assets generally will benefit across the board. So everything that I'm saying now from a technical perspective could be completely wiped out within one single, like, Truth Social post or Twitter post, you know, and that's important to remember. Taking a look at metals, gold. I mean, this is a weekly candle, but we're still midweek technically, and I don't even know what to say about metals these days. Like, it's just been a wild market. I was saying to Blayn earlier today, actually, is I think the effect of this sort of range is it's gonna be in play for a long time, right? Unless something drastic happens, like, you know, somebody drops a nuke on somebody, we'll probably see gold just surge like ridiculous amounts, unless money just completely gets eradicated from the market. There is that too, but I think these levels are going to be key over the next couple of years, these sorts of areas. We've already seen the first rejection here. Like, that is a strong daily candle. From the open to the low, it was 8.27%, and it managed to just close minus 1.88%, closing above that low, which is like a telling sign, right? That's a big sign, or at least short term, it's a big sign. Now, what would be the worst case scenario for me, and probably Blayn as well, is if this following sort of thing happens and it just tracks and contracts in here for a long time like this. Because remember, these are so sensitive. Like, I couldn't even tell you. Yes, there's certain macro events that are going on that cause markets to be a little bit irrational, but to see how gold and silver has moved in the past few years, and then to see as the trend is kind of nearing to an end, the violence that ensues, these areas become really sensitive, right? So if we just track in here, for me and Blayn, who trade breakouts on gold and silver, this is just going to be an absolute nightmare to try and trade. So it might be time to get some mean reversion systems in on the metals. Silver is even worse.
It easily could as well. That's the thing. We're seeing like daily moves that were like a whole week right now. And I think if we goes inside that range, you know, if we just take history, you know, for example, like what's happened before, we will chop around for potentially, unless something happens, it could be up to a year. You know, it's possible.
Yeah,
gold comes in waves at times. You know, it's just part of the commodity.
Yeah, I mean, look at this. So this is on silver at the moment. From the high to the very low 2 days ago, it's down 50%, or 49.84% to be exact. Like that for a metal and a market the size of silver is just unbelievable, in my opinion. Like, yes, silver is gold's little volatile brother. However, that is just insane. And I mean, this candle alone, I remember watching this. It was a 26% down on the day, but I think it went past 30%. What was it? 35% down on the day. For a metal is just crazy. And my fear now is, again, that we're just going to see and a massive contraction, because if the volatility dies down in these markets, then guess what happens? The range is tightened. There isn't as many breakouts. Like, don't get me wrong, trading silver, towards the back end of last year was an absolute dream. I made some good money trading silver because I have breakout strategies on it. Now I haven't traded it in a couple of months, or at least I don't think it's been. I took a short a couple of days ago. I was short on this day. Sorry. I was short on the break of this low. Or was it this day? No, it was this week, wasn't it? It was Monday. Yeah, it was the short of this low. And I actually walked away with a profit on that, ironically, as soon as the candle ended up bullish. But yeah, that's my fear, that the metals have created such a large range now that it's going to be a struggle to trade it moving forward. Oil, I mean, I kind of expect this. Oil does this kind of things. So I'm not too, and I don't trade oil too much, so I can't really comment on it. But what was that, right? Was it on that one day to the high of the next? 50% in like 48 hours, just insane. This is why news, macro, fundamentals, geopolitical stuff that's going on will always trump technicals. You could figure out the best technical pattern in the world, but news can come in, or like a geopolitical event, and just completely override that. And actually, Martin spoke about that yesterday for systematic traders, is you could run a back test and over optimize your strategy. And it could just be the fact that you got lucky on the right side of news a lot of the times, hence why you made a lot of profits on that system, and therefore it has a higher profit factor. If you don't go through and understand why it made a profit when the trades worked, then you could just be guessing and on the right side of news, which is very difficult to kind of replicate moving forward. Anyway, onto the S&P. As I say, buy the S&P every week as part of my basket. However, I would really like to see it drop back down into this area here. It's just what the S&P does. It rallies. It has a very sharp and quick sell-off over the course of a couple of months. Goes into a previous high, like a previous significant all-time high like this and like this, before it has kind of a very sharp V reversal. It does it on a small scale, it does it on a big scale. So what I mean by that is this is a larger move, this is a larger move, but it also does it over here. And I mean, there's more in there. Over here, breaks above, retest. Like it's just what, I mean, there's probably a level down here as well. So I'm kind of eyeing this area up as the low of this next leg. Where's my bars pattern? Again, just so we can see for context. Something like that. Okay, I would love to see that. I mean, this one was a little bit more accurate in terms of like it sold off pretty much to that level, which will look a little bit more, whoa. Look a little bit more like that. That's kind of what I would like to see right now. Again, if tensions erupt in US and Iran, of course, there's nothing stopping this from tanking 30, 40, 50%. If a nuke's dropped, it could tank 100%. You never know. But this area is really, really my kind of biggest area of interest over here. I would like to bid that hard as and when it comes down. I don't really look at NASDAQ too much because I base everything off the S&P. Again, they're very highly correlated. So let me just get rid of all these indicators because the windows are going to annoy me. So you can see, I mean, this is even more than the Bitcoin and Ethereum correlation. You can see they're pretty much always there or thereabout on the scale of 1. Take a look on the weekly. That US 100 feed doesn't go back very far. Even on the hourly, right? They never move independent from one another. Oh, sorry. they sometimes move independent from one another as they come down to zero. Very good for mean reverting if you can find a strategy built around the correlation coefficient. So I was reading a comment then. But then going to a -1 correlation, it just very, very rarely happens because one market isn't going to move up and the other market's not going to move down, especially with the NASDAQ and the S&P because they have an overlap of assets underneath. Okay, so Rob said, I'm going to be blunt. No one here sees my face. Have I annoyed you? Huh? I realise I probably have. I don't know what you're talking about there, dude. Also, is there many people watching this live? This going off assets is more boring. The algo trading is more interesting than you said before. You'd rather hear blunt truth. Yeah, absolutely. There's 600 plus people here at the moment. The problem that we have with that is I am a systematic trader, Rob, but I also have to cater for everybody else, and we are traders / investors at the end of the day. So sometimes it's good to talk about markets, but if you don't want to be here, absolutely, that's fine. You can close off the session. I was forcing you to stick around. So feel free to just come to the algo trading sessions. That's absolutely fine. Although I am done now because I don't have anything to go over on FX because, to be completely honest, I'm not bothered about FX. I trade them in a systematic way, and that is what it is.
I mean, I'm not going to add anything to that because I don't really go for markets much.
To be honest, I mean, like I said, this is the first one that I've done in like a few weeks. I haven't really kept up to date with markets, to be honest.
To be honest, like the only thing that I've done to do with markets is I've sold off portions of my S&P 500 because the system that I have that runs on it gave me that trigger warning. So that's not financial advice either. That's just it's just a safety precaution in terms of like just in case of a bull market, then a dollar cost average back in over the next 12 months.
Yeah, I also if anybody was in yesterday's session with Martin, I dropped Martin mentioned a 50% discount code for Darwinex clients or anybody who comes through Darwinex. I dropped that into the YouTube video description and also into our Discord earlier. So if you did want to check out My Strategy, which was the platform that we discussed yesterday in the session, feel free to jump in the Discord and take the discount code from there. Did you buy I haven't annoyed you. Yeah, I feel like you. Yeah, I don't know why you get that idea, Rob. I mean, if it's because I don't reply to my messages sometimes, that's just because I'm ridiculously busy. So yeah, don't ever read anything into that. And still here because we all find you handsome. Well, I appreciate that, dude. I appreciate that. I've had a pretty back and forth roller coaster month this month. I hit a new all-time high 2 days ago on XAQP of 148.55. Then had a really bad day today, but actually ended up positive because I scaled out some positions. This is it's actually an interesting point, right? Is I am fully systematic, but I do have a discretionary oversight of my risk and my exposure. So, for example, today I was short on GU and still am. Was 4 positions long on dollar yen, and because again of the correlation coefficient being pretty much near to a -1, that's pretty much 5 positions in the same direction. If that moves against me, that's a lot of risk or a lot of exposure on that one-way market direction. So I actually scaled out of some of the positions earlier today. I've still got some small size running both on GU and dollar yen, but people always ask about my trade management. Usually in Discord, people ask me about my trade management, and yes, I do get involved, but not too much. And there's an interesting topic I want to discuss soon, but I'm going to do a proper sort of presentation about it because I think it's really, really important, and it's about capacity. So if I bring up what I'm doing, XAQP. If I bring up my capacity here, and then scroll down to max investment, you'll see my max investment as of right now is 24 million. Okay, now this is a hypothetical 24 million based on the data that we have on my strategy. However, if we take a look over here, you can see, in fact, I don't know why this changes sometimes. Like sometimes it tells you how much percentage you've used. I don't know, weird. So if we go on the investors tab, you can see I've actually used 43% of my available capacity before my Darwin gets shut off. So that means that my Darwin is only going to be open till about, I don't know, 3.5, maybe 4 million, which to me is like really not good considering my capacity should be above 25 million. And I had a call with Javi last week, and I think it's really important to discuss this in a little bit more depth. But essentially what's happening here is this is the live capacity. So there's a slight difference between the hypothetical, that is what we judge from the data that we have on you, but then from your live data, from the trades that go through, where we can actually measure the impact of the slippage, that's where we calculate your true capacity. Now, if we scroll down on this page, you can see that we have a divergence by order. Now, the divergence in pips measures the slippage. You see we've got this big gray line in the middle, and that's basically zero. Okay, so that as close as we can get to zero, or at least skewed positively, which you can't really account for, the better. Now, of course, you are going to get slippage. You know, if you're holding through news or you're holding through a liquid periods of the day, of course, your orders are going to be slipped slightly more. If you're trading with larger size, of course, we want to be slipped a little bit more as well. Now, the biggest thing that you can do to counter this, and something that I'm doing as of right now, which is a little bit longer for me because I have to work through so many different strategies, but for a discretionary trader, it's a lot easier to implement this, is splitting your orders. Okay, so I mean, it's easy for an algo trader to do this. It's actually easier, I would say, for an algo trader to do this. But if you have more like a multi-strat, then of course you've got to change it on every single system, test it, ensure it's working correctly. So what I've been doing, or actually the reason for this is because if you're clipping your full size at market, there's of course going to be more market impact. So when I was talking to Javi, he was saying, depending on the asset you're trading, try and split your orders and leave a slight delay between the entries, but not only the entries, between the exits as well. So this measures orders, right? So you can see it's the last 100 orders. Okay, so that's essentially 50 trades. So you've got an order going in and an order coming out. Now, the non-negotiable for me is my stop loss doesn't change. Okay, so I've split my entries into two. Stop loss remains the same. However, when my first entry fires, I can set a delay. And if I'm trading indices, I'll set the delay for like 3 seconds. If it's FX, I'll set it for 5. If it's an exotic pair, I'll set it for 10 seconds. I have to rerun all my tests to ensure that doesn't screw up my edge, but so far it's not made any difference whatsoever. However, I'm putting 2 lots of smaller size through the book at different times, so there's less market impact. And yes, 5-10 seconds is all you really need to avoid that, and as well on exit. So if you're hitting target or you're closing your position manually, try and split it down again. If you've got 1 lot open, try and close 0.5 lots, and then another 0.5 lots 10 seconds after. I don't think there's going to be any instance other than when you're trading across news where you'll close your first 50% and have to wait 5 seconds and you'll lose a load of money by that 5-second delay. But what it will do, so what I'm saying is it won't or shouldn't affect your performance, but what it will do is increase your capacity massively, which is kind of what we need at Darwinex, because with the index, as we're closing in on capacity, we kind of need our traders to increase their capacity so that we can allocate more capital, so that we can take more into the index and we can allocate more out. Because if I bring up the index, the figure that you see on here, whilst this is correct for the amount of AUM that has gone through Darwinex as the platform, we also offer it through an AMC certificate, which doesn't display on here. Okay, our AMC AUM isn't displayed on this page, so the AUM that we have is actually above 40 million. I want to say it's probably about 45 million, closing in on our 50 million capacity. So I think soon what we're probably going to be doing is closing down the index for investment moving forward, whilst we judge how we can increase our capacity or potentially open up the index to more traders or create an index 2.0. I don't know what decisions are going to be made on that end, but all I know is that capacity is now becoming a little bit of an issue for index, a little bit of an issue for me, and probably many other traders out there who don't realize that they're actually capped. Again, if we look at Blayn, for example, Blayn also has the same issue, but not to a higher degree as me. So Blayn's hypothetical capacity is a lot higher than mine at 57.5 million. You can see the toxicity flow of Blayn's orders are currently negative, both on entry and exit. You only get this data if you trade at Darwinex. If you trade at Darwinex 0, for some reason this doesn't display. Javi is currently on it trying to get it working, because we only noticed the other day when we was on the session. So 57 million, but if we look, Blayn's used 13% of his capacity at 2.6 million. So that, how much is that? Like 20 million?
Something like that.
15 million probably. So Blayn's max capacity is actually 15 million live compared to the 57 million that should be hypothetical based on his real-time slippage. So you can see that Blayn's average slippage is far closer to the kind of 0 range, whereas mine is far, far away. So what my average divergence is 0.29 pips, whereas Blayn's is 0.05. Okay. And then the red line down here is kind of like where the red line here is where your Darwin will be closed, which is at minus 1.02 pips if your average becomes that low. So yeah, I think it's worth doing a full session on that. These are my mean reversion strategies that enter throughout the evening, and my S&P strategy that enters on a Sunday evening. So I need to chop up those orders into multiple orders as well, and try and ease them in as opposed to just one big order going in and coming out. But I think this is really, really important if your goal is to be a part of the index and your goal is to raise capital and to be an actual professional asset manager, not just a trader. This is genuinely something that you need to be focusing on now before it's too late. Because there is no point building a record of a trading strategy that you think is perfect, but then you realize down the line you can only manage 200K or 500K. You're never going to make a living, or you're never going to make, a lot of money on a small AUM. So it's really important that you understand the importance of capacity and the things that you can do to try and reduce or to try and increase your capacity. The great thing is that, like I say, this is just your last 50 trades, so your last 100 orders. So for somebody like me who takes on average, 3 trades per day, let's say, my average is actually lower than that, 2 trades per day. After a month or so, my capacity could look totally different, because if I start splitting my orders, and on both the entries and the exits, if I start splitting my orders, you'll probably see a whole new set of data here within 1 or 2 months, and your capacity could increase exponentially. So super, super important to take a look at. And I know I'm trying to push Blayn to do the same as I go through and edit all my strategies too. So the King, welcome to the session, dude. It's a pleasure to have you here. The big money always builds into a position over time to reduce slippage. I can imagine they take 50 to 100 orders on both entries and exits. Exactly. There's not going to be any large fund who are operating with hundreds of millions or even into the billions just clipping one order in and out. It's okay for small traders. If you're trading with a clip size of 0.01 lots, of course the book will always fill you. Especially if you're trading at like a B-book broker, for example, they will always be able to facilitate that size. But if you're trying to push through millions of dollars worth of investment, the flow isn't always going to be there to just clip it straight away. So if you can ease it in, and also average your entry, right? Because if you can go, instead of clipping it and getting slipped and being filled, a pip lower or 2 pips lower, if you can average that entry, you actually might even get a sort of a better average entry price than just clipping all in one. Rob, you need to stop feeling guilty, mate. I don't take any offense, dude. This geezer feels guilty for everything he says. But yeah. Blayn, is there anything that you wanted to go over today, dude?
I mean, I didn't really have anything planned in terms of like building or anything like that. Just because yesterday was pretty in depth sort of session.
Yesterday was a long session. Yeah.
Didn't want to sort of add anything more into the mix today because I think even for myself, it's a lot to process yesterday. That there's a lot of good learning in there, a lot of good things to sort of reinstate some of the methods that we have in place for building strategies as such. But yeah, no, nothing on terms of capacity as wise. I think one thing that I always do sometimes when I do my builds as well is like I might have one of the systems, but I'll apply two different sort of managements to it, and I do sort of like split orders for some systems, but then I'm splitting orders and I'm taking the orders at the same time. So that's maybe something I need to tweak, like as you said, in terms of putting a small time delay in. Because if the data holds up even with a time delay, then if it increases capacity, then it increases capacity. It's a win-win situation, to be honest. Was that sorry?
It was weird when I first saw it in action when it clicked on Sunday. I was watching it click my first trade, then like I think it was 5 seconds after it clicked my second trade. But I still got slipped on them anyway. So I think that's just because it enters on a Sunday evening. But that, to me, that's probably what holds my capacity back because that's so far past the Darwin closure level. And so those rogue trades skew my average massively. So I might have to say goodbye to that strategy, or at least reduce the size on it massively because, or even split it into like 5 orders.
Yeah,
I don't know.
I think you can scale as you grow as well. I think it's important to do these sort of things, but I think doing it when you're scaling is probably the better way because it gives you time to sort of build, adjust, test, and really find that sort of sweet spot, not only for the systems but also for capacity as well. So I think it's good that you've shared this with people as well because now in the back of their minds they know what they need to do as they're growing as traders as well. Mason says, how do you guys navigate around daily open spreads for your systems? I mean, I don't really take any trades at daily open anyway, so I don't really have a problem for it. For floating trades, I mean, like for open positions around like daily open, I mean, I don't tend to hold positions over the weekend anyway, but if it's like, say I'll likely hold 2 positions tonight into tomorrow. I'm not too fussed because I'm normally trading things that are liquid that have good spreads anyway. And most of the time my stop losses are pretty big. I think if you take away everything that can destroy you as a trader, slippage, spreads, even overnight costs, like to the most part, as long as you try and eliminate as much as the things that cost you as a trader, that's the best way to go about it. So if you're worried about, I always think, if you're worried about the opening spreads, then I think there's maybe some changes to do with the system. I don't know. I mean, that's based on that's the way that I've always done things. If I'm worried about it, get rid of it, or make sure that you don't need to worry about it. That's how you manage risk essentially. If there's risk around spread hours, make sure you're not involved in spread hours if it's going to be a risk to your system.
Yeah, I mean, I'm pretty much the same as Blayn, and I just have simple spread filters on, and you can put like you could put a check in to check if spread. Let's say the average spread, current spread goes 2x of the average spread for the past hour, for example. Then to close any position, it probably it can affect the edge quite a bit. But at least you know that if spread absolutely blows, it's gonna close your trades before it gets too bad. But it depends how fast spread blows out. But yeah, I'm the same as Blayn. I usually delay my entries. This is courtesy of Blayn, actually. He taught me this, so I usually just delay my entries until spread hours have kind of calmed down anyway. So it's only if I'm holding trades, but I'm the same as Blayn. It's rare that I hold trades overnight, and definitely not over the weekends anymore. But even then, it's like it might be UJ or GU or EU or something that's not too bad from a spread perspective anyway.
Yeah, I mean, if you think about if you keep trading around when spreads are high, the amount of cost you're going to incur at the end of each year, it would be, as much as it might not seem much from a nominal value at the current day, add over 1,000 trades and it can get you can give back so much unnecessary stuff to the market that just that little bit of a delay. See what the edge is like just half an hour later, an hour later. It can save so much costs, but also potentially make you more as well. It just depends on, again, everything that I'll say is all going to be dependent on what sort of trader you are, what sort of system you trade. Because if you're a swing trader, obviously that's going to be slightly different. I'm unfortunately at that end where I'm more day trading than swing. Yeah. I can't check my capacity. Does your Darwin need to be open to investment to check it? And what is the criteria to get funds other than Darwin allocations?
Yeah, so I mean, you would need investor capital for this data. Yeah, correct. Because this is pulled from like real investor capital. So when we're looking at this, this is the what my investors saw on this specific trade, for example. So yeah, I think you need actual investor capital to see this. Otherwise, just work off your capacity, but just know that that's a hypothetical figure and could be far, far lower depending on the current conditions. Now, like I say, this can change pretty quick depending on how often you trade, of course. But it's something that you should be aware of regardless. I think even if you're not open to investors, start trying to implement things that are going to benefit you from a capacity perspective. Trade in liquid hours, trade highly liquid assets, split your orders, split your TPs, don't close it all in one go. I mean, you can split it as much as you want. You can do 2 orders, 5 orders, 10 orders, just as long as it's manageable. I think it's easier to implement for a manual trader, but harder to manage. Whereas a systematic trader, we can build in the code, which is going to take a little bit longer at first, but then at least, moving forward, it can do it. You could even just build something, probably using Claude code, that would say, if I close 50% of a trade, and you just run this on a VPS, if I close 50% of my position, check it every tick, and then set a delay to close the rest of the position. You could do something like that, or when I open a trade, open the same trade again 5 seconds later. You could do something like that. Maybe I'll build that, and then you guys can have the code for it. Perhaps that's kind of my gift to you. We'll see. We'll see how long it takes me.
Add a disclaimer to that one if it doesn't work.
Yeah, if it blows up, it's not my fault. It's Claude's fault. CK, how did you guys get into trading? Signal scams back in 2017 or 2018, was it? 2018, maybe. I can't remember the year. Yeah, so I've been in crypto for a couple of years by that point, about 2 years. And then I ran into a signal scammer called James Watts, who told me I could compound 50% each month. And then, by the end of year 1, you'd have a CAGR of 1,000,000%. Bought into that idea. I probably bought into that idea of fast growth more because I'd been involved in the 2016 bull run in crypto. So I'd seen and that was my first exposure to markets. So I'd seen this kind of violent move in the market, and I thought that was just kind of normal. And yeah, I very quickly realized that wasn't the case. Then I found people like Trader Dante very early on in my journey, and kind of switched my headspace from that to professional trading, or at least trying to be a professional. And then probably about a year and a half ago, I met Blayn. But it's probably longer than that. But it was probably about a year and a half ago, Blayn convinced me to go all in on systematic trading, and I've never looked back.
Now he's killing it. I mean, I got in trading a little bit different way. Like, I done more investing to begin with. And then, you know, just naturally progressed into trading. Like, one of the reasons I got into trading was, first and foremost, I was at university doing mechanical and offshore engineering. And one of my projects was to build like a whole case study on wave forces on cylinder structures. And the way that you do that, you use a simulation called compound fluid dynamics, CFDs for short. And yeah, I clicked on the wrong article and came across Elliott wave theory on CFDs, and yeah, kind of the rest is history for me. That's kind of how I got into trading and just started trading waves. Traded manually for years, got no sleep, and got bored of getting no sleep, so transitioned into algo trading. It's as simple as that, you know. Like, I was literally like a slave to the charts. Getting no sleep. The only time that I got off was at the weekends, and that was pretty much it. Yeah, it's quite a sad story.
Oh, well, we're here now, and that's all that matters.
Still recovering from that sleep.
Yeah. You still don't get any sleep.
So yeah, I mean, nothing crazy for me. Just a wrong button click.
Signal scams and Elliott wave theory. That's great. I think I feel like most people, unless they have family in the industry, probably get sucked in the same way. I mean, I'm grateful for it, because without being pulled in by a signal scam, I wouldn't be here. Rob said, if you had to get a day job, what would you guys do? I mean, we both have a day job. You know, this Darwinex is our day job, if you will. Personally, I recommend any trader have some form of job or something that they can work on. If I could get any job, I'd probably, it's not really a job, but I'd probably open up like a sanctuary for abused animals. But I think I need more AUM for that, to make that dream happen. But I'll be honest, I'm pretty happy with Darwinex. It doesn't get any better for me. So yeah, I don't know your thoughts on that, Blayn.
I don't know. I've never really thought of a job. Nah, like I don't know. Obviously, I trained to be an engineer, but didn't go down that route. Then I trained to be financial advisor, didn't go down that route. Yeah, I mean, before trading, I just wanted to be a footballer, to be honest, and that was it.
A darts player, I mean.
Nah, that's my side gig. You know, every Thursday night I play the Premier League. You know.
That's funny. Yeah, Silver Kings. That's what I want to do. My profits as well, help animals. Yeah, like I mean, I don't talk about it too much, but I try and do stuff for, you know, underprivileged kids in and outside of the UK. But next on my list is doing more for animals. And my absolute dream is one day to have made billions and billions of pounds, and then I just retire and build a sanctuary and just take in, you know, abused animals and kind of re-nurse them back to health. But to do that, you've got to pay vet fees, you've got to pay staff fees, you've got to pay infrastructure costs. So that's like a long-term goal of mine in life. And yeah, I mean, full circle, like that's why we do the charity Darwin, right? It's like just trying to help people who are less fortunate. I mean, this session's took a bit of a turn, a bit of a deep turn. But I think we'll probably wrap it up here anyway. Loopy, is the charity Darwin going to multiple charities? I mean, it depends on when we get performance fees. It depends how much we have and what we can do with it. I would like to put that over to you guys personally. I would like you guys to decide where it goes. You know, we have clients from all around the world, from from every country you can imagine. So everybody's going to have different priorities or different ideas, and I'd be keen to hear all of them. So maybe we'll do close to a time when we actually have some performance fees that we can pay out. Yeah, maybe we'll kind of have that conversation then. So anyway, guys, I'm going to wrap up the session here. It's been an absolute pleasure as always. We'll be back tomorrow at 4 p.m. UK time. Probably come on, do some Darwin review stuff, maybe do some strategy development. Blayn and I will have a chat before tomorrow. CK, one more question. I have about 6 months ago got into systematic trading after 7 years of bad trading, similar to your beginning stories, Elliott Wave, etc. Is there anything in particular that I should learn or look at now in the beginning of my learning curve? If you haven't watched our strategy development sessions, that's a great place to start. We also have a strategy development channel in Darwinex. I am pretty much fully self-learned with the guidance of Blayn. So I can't really point you towards any sort of documents, courses, or books or anything because I never went through them. I would say your biggest help these days will be AI. So, you know, Google, Gemini, ChatGPT, Claude, whatever it is that you want to use, just sit there and ask it questions. Like, how do I do this? How do I do that? Don't be scared to be a beginner is my biggest piece of advice, because what I've noticed with a lot of traders who've now started going into systematic trading, which has been a lot over the past sort of 6 to 12 months that I've noticed, is they don't want to put themselves in the beginner shoes. But believe me, you don't know how much you don't know about not just systematic trading, but systematic trading at scale. You know, when you were talking outside of just trading a retail account, for example, you don't know how much you don't know. Don't be scared to be a beginner. Just use AI as much as you can. Ask it questions and kind of float ideas. Like, I've got this idea of doing X, Y, Z, you know, critique me on it. Is it going to work? Is it not going to work? Why would I do this? Why wouldn't I do this? And I think you'll learn a lot more that way than you know, finding somebody online and reading a book or buying a course or something like that. That's my opinion, though. Blayn, I don't know if you think any different.
I mean, I think I'd just like to add to that, to be honest. What I would say as well is, you know, people might glorify, like, obviously AI trading, like systematic trading and building systems, but for the most part, 8 out of 10 systems will fail. 9 out of 10 systems will fail. You might do like a couple of hundred systems before you get a portfolio. Don't be put off the fact that you'll get failed tests. They're actually all successful tests, because you don't need to trade them. You've validated the idea that it works or it doesn't work, and that's part of the process. You know, so if you get a bad test, it's not a bad result. It's a good result, because you now know that strategy doesn't work, or that doesn't work with the parameters you've put in it. So, you know, most of my days, and I'm sure Kieran's days, is building a strategy and it'll fail. And that's just part of the process. You know, building systems is a numbers game at the end of the day. You know, you're crunching data. If it was so easy, you'd have a lot more people trading. And that's just the hard truth of it. Don't get me wrong. Like, you know, it makes execution 10 times easier. It helps. As long as you're happy to be hands off, it does help with that as well. You know, you're not looking at I would recommend not to look at the P&L all the time as well. Just for the first 3 months, let it do what it does. Make sure you're comparing the data as you go along. So, and then making sure that, you know, going forward, that you're actually managing them. And like, you manage things in a different way when you're algo trading to manually. But you'll figure that out along the way, because I don't think there is a wrong way or a right way. Just as long as you're not overfitting, don't feel like you need to force a system to be profitable. Sometimes a system in its raw state is probably the best thing that you'll get. Like the thing that will probably be the most robust going forward. You know, I think Martin touches on that yesterday, so it's probably a decent lesson to go back and watch. But yeah, don't think that early success is going to come overnight. You know, you put in the hours, you do the work, it will come. It just sometimes takes quite a few systems to build before you get to that first one.
Absolutely.
Not trying to be Just trying to be real.
It's truthful, isn't it? And that's what we spoke about that at length with Martin last night as well.
Exactly.
I mean, CK, if you want to spend 2 hours watching last night's session, I think it's a great use of your time, especially if you're still kind of in the beginner phases of building out systematic strategies. So I think it'll help you out a lot. And Martin does say, like, whilst he's built and sells his software that he shows on the stream, you can still do it manually for free, essentially, on using Excel. So it's not like a sales pitch. It's genuinely 2 hours of Martin talking about best practice when it comes to robustness and overfitting and stuff. So definitely check that out, and check out our previous streams on strategy development 2. Hour of talking takes it out of you. Anyway, guys, I'm gonna wrap it up here. I hope you've all had. I hope you've all enjoyed this session. my mind always goes at the end of a live stream, so I can only apologise for that. But we'll be back tomorrow at 4 p.m. UK time. I hope you all have a fantastic rest of your evening, morning, or afternoon, depending on where you're watching this in the world. Thank you all for joining, all for watching, and all for sending questions in the chat. Peace out, guys. Have a great evening, or rest of your day, whatever. I'm closing out anyway.